Everyone, thanks so much for joining. This will be my first YouTube video. Today marks the launch of my new website, my new brand, 𝙏𝙝𝙖𝙠 This brand has been inspired by my appreciation for the Hex network, the entire ecosystem of the Hex cryptocurrency, or as some might say, the crypto asset, because nowadays cryptocurrency may have a negative connotation, a word synonymous with dark side of cryptocurrencies, like the scams, the exploits, whereas we want to identify ourselves as a crypto asset in that it isn't so much a bargaining chip as much of a actual store of value. Excuse the setup. I'm just learning this YouTube game, so I'm literally just recording onto my Zoom. I think Zoom has a great shift green screen option. It has good lighting options. You know, Zoom is something I use every single day in my day job, so I'm well versed with it and know my way around it. So I'd rather just record on Zoom using my webcam, edit in screen sharing bits, and put out a YouTube video. I ordered a GoPro. I've ordered a very high-end webcam that's on its way, so quality will improve of the webcam. And then I want to do more videos outside, and I'll use the GoPro for that. I also bought little accessories for it, like little lights, tripods, a microphone, and I'll experiment and see what works for me. But my intent isn't to become a viral influencer or YouTuber or even Hex influencer. I am just an independent investor, extremely passionate about this single cryptocurrency. You won't see me pump and dump and promote other cryptocurrencies. I am 100% bought into the game theory behind Hex, and I'm doing my part to pass it forward. The same way that I was inspired by other people in the community, I feel like I can bring a certain edge and get people to take a look at Hex, you know, just see what it's all about and make the decision yourself into whether or not you would like to invest a little bit of money and see how it goes over the next few years or months, or whether you think it is a better vehicle to your savings account and you prefer to use it as store of value and earn trustless interest with it. So that's up to you. None of this is financial advice. I state that very clearly on my website. Speaking of which, today it is launched, March 14th, 2021. 𝙏𝙝𝙖𝙠 is my website. I've been working on it for the past few weeks now. Any free time I had, I was researching, writing, compiling graphics, obviously working on the web design and putting it all together. And now I'm very excited to say it's complete. So I recommend you check it out. There's no affiliate links on the website. I'm not shilling a product with it. It's a website to get you guys started. If you like what you see, you like what you read, go down the rabbit hole yourself, go through YouTube, go through the Google, and find the answers yourself. They're out there. But if you are someone like I was a few months back, you know, you would really appreciate a resource where you could just hop on a Zoom call and just talk things through. I'm doing my part to make it easier for people to get started with Hex. And if all it costs is just half an hour to an hour of my time, I want to put up a calendar and let people book dates and time slots and have a conversation with me to help you get started with Hex. And I think this, you know, documentation over YouTube is my way to document my own progress, document the development of Hex, right? Because every video I hop on, I can be like, today the price of Hex is half a penny. Next week, it'll be 2 pennies. And then a few years from now, we can look back and say, geez, wasn't it nice when it was only selling for a penny? Because now it's going for $20, $40, $200. So I'm a millennial. I live in Canada, and I've not done much with my savings the past few years, especially last year. Last year was a pretty successful year for me with different businesses I had going on, and I just kept it in my bank account. A bunch of cash just sitting in my bank account all year. Didn't really pay too much attention, but you know, it's 2021. I'm looking around and I'm noticing the cost of goods is going up. I'm turning on the telly, and there's constant chatter of potential inflation on the way. Doing some research, following some Canadian economists, different influencers talking about the economy, and I'm learning more and more about how dangerous hyperinflation can be, how unsustainable it can be for an economy, for the world to thrive in a nearly zero interest rate environment. It's dictated by a system that's insolvent, and we really don't know where we're going to fall off the cliff, how soon the cliff is, but there's definitely a cliff coming up. This is not sustainable. It'll either lead to a jubilee, it'll lead to some sort of reset, who knows. But I believe that it's out of my best interest, the ideologies that I believe in, which lean a little bit to the libertarian side, that I don't want to participate in the Ponzi scheme. I don't want to participate in, especially the Ponzi scheme currently going on in Canada, where we are at the peak of the housing bubble. Homes are going for 20, 30, 40% over asking and off the market within the same week. There's a bit of a frenzy, and it's everywhere. Not only in the metropolis, but outside the cities, there's homes going out for unspeakable amounts of money. There's homes being sold for a lot more than they're worth. Now, obviously, it speaks to the levels of inventory. It's a free market, so as long as it's a battle between supply and demand. But I think, and we'll see how this plays out, but I think this near zero interest rate is a bit of a trap. It's a bit of a trap to set people up to fail. People are naive to take advantage of the free money, and I believe the majority of the uneducated investors out there today are going to get burned. So through the research I've done, through the people I've spoken to, through the things that I've read and watched, I think it's in my best interest to not participate in the, some might say, a Ponzi scheme that's going on, and instead look at alternative investment vehicles to put my money to work. Hex is a project I've been following since the beginning, but to be quite honest, it went over my head the first year. Richard Hart, the founder of Hex, is someone I followed since I got into crypto in 2017. He was one of the voices I would pay attention to. And when he talked about creating his own cryptocurrency he started talking about it in 2018, and then in 2019, he solidified it and launched it at the end of 2019. There was a bit of a crypto bust at that time, and I had focused on other things. So, to be very transparent, I did not even participate through the first year of Hex. Obviously, a giant shortfall, knowing now that it peaked at 352x versus the US dollar. I think now it's hovering around 150x return since the inception. So obviously it would have been a darn fun investment, but I only caught on after the first year. I caught on, to be exact, during the 2021 New Year's live stream that Richard hosted. It was kind of like a yearly recap, and I had a pretty quiet New Year's due to the quarantine that's going on in Canada. And I hopped on and learned some things, did a little bit of research, and said, now I understand it. Now it clicks. And more importantly, now there's a bit more credibility. Now I know this isn't just an ICO or security. This wasn't just a pump and dump. This is something that's going to stay here past the time I'm dead, right? This is going to stay here beyond our lifetimes, Richard Hart's lifetimes. It's something it's a complete project, and it's a tremendous opportunity to make a respectable yield on your cash reserves. So the fundamental way to make money with Hex is by buying tokens, locking them up via stake, which is the equivalent of a time deposit or certificate of deposit that your bank can issue you. And you earn a varied interest rate. It's a bit of a exponential yield curve. If you stake for up to 5 years, so if you stake for 1, 2, 3, 4 years, you would get anywhere between, you would get around 10% per year of yield. If you stake less than a year, for example, like a month, you would get a 1% interest rate, locking up your money for a month. And then if you go 5 years, 5 years right now is the average stake length, and it yields about 38%, close to 40%. And then if you lock up your money for 15 years, which is nearly the maximum length you can stake, the returns are about 60% APY. But nonetheless, I did some research and just said, hey, I'm going into a new year. My cash flow is projected to stay roughly the same, healthy. I have multiple streams of income. I'm fairly diversified, and I'm honestly too busy with what I do day to day to manage my money. It's something that I dabbled with previous years and just come to realize that it is nearly a full-time job. And for that reason, I looked at Hex, I looked at the API that is guaranteed. Well, I should say nothing's guaranteed in crypto or in Hex, but this is a smart contract. It is immutable. It's been audited for its economics, for its security. And if you lock up your money with this, and if you interact with a smart contract, you will earn interest. What's unknown is what will be the price of Hex, because you can earn 10, 40, 60% interest, and the price of Hex can fall from the time when you locked up your money. And then if that's the case, then though you've earned interest and generated more crypto tokens, you don't come out net positive in the end, right? Because the price of the underlying asset has reduced. But due to the other nuances surrounding Hex, there's price positive game theory, such as the locked up supply and the predictable end stakes. You could hedge against sell pressure, or some might argue that Hex has been engineered to appreciate. And though Hex is not a stranger to volatility, it's had 6 major price swings in the past year, where it's hit an all-time high and fallen as low as 60, 70, 80, 90%, nearly 90%. Similar to other cryptocurrencies, Hex, Bitcoin, Ethereum did the same. There will be future price volatility, but over the long term, similar to other cryptocurrencies, Hex is scarce. Hex is especially scarce. Hex has a specific liquidity pool where, unlike centralized exchanges, you can just buy and sell, and there's a very clear bid and ask book. In Hex, there's an automated market maker. The liquidity is on Uniswap, and there's currently no more than $2 or $3 million of liquidity. So if somebody were to come in and buy a few $1 million of HEX, the slippage would be exponential, and they would just be buying against themselves. And similar on the way down, if they wanted to sell, $10 million worth of HEX, they would probably get no more than $1.5 million, probably even $1 million by the end of their slippage. So HEX is extremely illiquid. It's extremely scarce. It's extremely valuable due to the utility it has. And I believe that just locking up my money with HEX and earning the yield, the programmable yields, is a better idea than putting my money towards real estate in the Canadian market, buying a home, buying Canadian equities or US equities. There's many more reasons I can go into in this video. Would be very, very long, and I am sure it's already quite long. I'll speak more about it in the future, but I just think that for many of the reasons I've already laid out, I felt like it's a better use of my money to put it towards HEX than it is to put it to work in legacy markets. And we'll see how this plays out through just from the future and just from my YouTube channel and the stuff I put out. Now they've heard me ramble about what my personal reasons for getting into HEX are. I wanted to give you a bit of a payoff for sitting through this long video so far and create a stake, right? So document myself creating a stake, show you what it looks like, and show you, needs to lock up your money for a specific amount of time. But before we do that, we should look into when. But before we do that, a good exercise would be to look ahead and figure out what is a good time horizon for the investment I'm about to make. HEX is a vehicle that puts the user in control. So you don't need to go down to a bank and look at their GIC options or RSVP options, their bond options of buying it for a year, 5, 10 years. You can do a certificate of deposit on the blockchain for any number of days or years, up to about 15.2 years. That's the maximum for other reasons. Now, I'll talk about this in future videos, but I'm a believer in stake ladders. There's different schools of thought. There's different ideas within HEX, which makes the game theory so much more fascinating, and we'll unravel this through my YouTube channel. But I've decided to create a staking ladder. So we're currently looking at my staking ladder. The idea is that instead of locking up large sums of money to end stake every year or every 2, 3, 5 years, I've decided to divide the stakes to about up to 4 per year. So every quarter, nearly every quarter, have an end stake. The purpose of that is twofold. First, just be more flexible. I'm putting in majority of my savings, and this will mean this is sort of like my savings account. And for that reason, I require the flexibility to liquidate some of the assets. Thus, having a stake end quarterly gives me that flexibility. I can get fiat back from the system without getting penalized by emergency end stakes, versus people who are staked for 5 years. If they have an emergency, they need their teeth fixed, they have a family medical condition that needs to be addressed right away, and they've exhausted every alternative, so they have to go to their crypto HEX, and they have to go to their HEX stake. In case they end stake, which is available for all stakes, it significantly penalizes. I'm pretty sure it depletes the entire interest earned, and depending on the stake length, would nuke at least half of the principal, if not more. So it's very significant, though people still do it every single day. People nuke their principal stakes significantly, and they do it for unknown reasons. And I feel like I can reduce my chances of needing to do something extreme like that just by splitting up the stakes. So though I lose on the upside of interest, though I lose the potential yield I could have earned through staking longer and bigger, I gain the flexibility to move my money around. And for that reason, I've put in, I've allocated more towards HEX than other investments, though protecting myself, dividing the stakes over time. What I've also done is split up my stakes over 4 different accounts. Again, diversifying the need, and now in this case, similar to how I'm diversifying the need to cash out and the need to extract my money, dividing stakes across multiple accounts reduces my chances of being compromised and losing all the stakes. In this case, knock on wood, and though I do everything to protect my my keys, in case one of my accounts does become compromised, I won't risk to lose stakes beyond just that account. So that's why we have lines in different colors painted on this bar chart. Now, what I want to focus on today is filling in the gap between 2032 to 2033. So that is 11 years from now. And as you can see, I have stakes going out as far as 15 years, right? At 2031, that's a big 10-year end stake. But if you look all the way to the right, those are 15, 14, 13, 12 years from now. And they're all my birthday. Now, the stake I want to do today is do my 11-year stake. Now I'm going to show you guys how to stake your HEX. Now, for the purpose of the future, I want to document what the current price of T-shares are. They currently, 1 T-share is going to cost you 17,045 HEX. And this is going to sound like such a bargain a year, 2, 3 years from now, even in a day or two. There's a major end stake coming out tomorrow or the day after. It's difficult to understand when the stake will technically be available, the end stake, and it's not guaranteed. But as soon as that stake ends, it will increase. But as soon as those new HEX tokens are minted, just the value of staking will depreciate slightly for all the users thereafter. So I can take advantage of this just by staking ahead of the upcoming end stake. And I'm more concerned about the actual staking and T-shares and the yield I will receive versus the price volatility. Though no one knows what's going to happen when this major end stake of 1.5 billion HEX tokens ends in the next day or so. For all we know, it could dump on the market and bring the price back down to 2020 levels. But I have a theory that it'll just be restaked. Thus, I really don't care if I can pick up cheaper HEX in the next few days. I'm more interested in locking up this amount of HEX for 10 years and earning yield on it. So I'm going to go ahead and click stake. It'll tell me what the fees are. Let me see. Yeah, I can do average. There you go. Paid $23 in fees. Extremely high, but a bargain for what I used to pay earlier this year. I paid gas fees as high as $60 US. I paid $50. Typically, I paid $50. There you go. Transaction confirmed. Now let's do another 100. There we go, 110,000 for 2032 May 19. There you go. Everything checks out. I will click stake. Let's see what kind of fees we get. 20. I'll pay $23 again. Confirm. Yeah, that's good. Perfect. So I've just locked up in today's value about 2,200 US dollars. So near about 3,000 Canadian for 10 and 11 years. And though 2,200 US may seem like a lot of money today, I think this pot is going to be worth exponentially more in 10 to 11 years when it ends stakes. So let's conclude this video. I really appreciate you guys watching me explain my personal appreciation for Hex. Though it was a brief summary, it was a healthy introduction to my channel. And you watched me stake 220,000 Hex for over 10 years. I hope you enjoyed, and hope you subscribe and look forward to future videos. They will be a lot more engaging. I'll try to do less of these webcam videos on the whim and do more videos out in nature, out and about, showing you guys the beauty that Canada has to offer. Thank you so much for watching, and have a great day. Bye.